last chance to accumulate Bitcoin. Paul Tudor Jones says he likes Bitcoin and thinks it should be a bigger part of your portfolio. Jim Cramer predicts Bitcoin is about to go down big. And JP Morgan tests tokenization with BlackRock. Hey, everybody, welcome back to Crypto Daily. Got a lot to talk about in terms of the markets. Obviously, you see here that yesterday to today, we did the recording yesterday, and we were at 27,500. Today, we're at 26,600. So, little dip in Bitcoin, but when you take a step back, and that's what I want to talk about today, you see a much different picture. So, like, look at the chart here. I'm sitting at the 5-year chart, obviously. So much bigger picture than I think what most people typically look at. And what you see is a little blip on the radar. Like, this is just one little candle in terms of long-term price action. So it's always kind of nice to zoom out whenever you have a big run up or a big pullback or a small one. It's nice to kind of zoom out and realize the macro status of everything. And in my opinion, and you'll see in this, the next tweet that we look at, we're in this kind of accumulation zone for Bitcoin. So I've got it highlighted here in this box. But a lot of people are saying that, we obviously saw the bear market take us all the way down to like 15K Bitcoin on that one day. And then we obviously recovered from that. And now we've kind of been in that sideways zone. And typically, if you look at, previous cycles, this was a good time to accumulate Bitcoin. We are about $2,000 below the 200-day moving average. So, in my opinion, great time to accumulate Bitcoin. I've been buying a lot more every single day. I think we're kind of heating up towards the end of this bear market, but that's just my personal opinion. Obviously, not financial advice. So, like I was saying, this is kind of an interesting chart. Let me zoom out so you can see it. But you can see that, in every cycle, and there's been, 4 major ones for Bitcoin, you've got this massive, bear trend downwards. So you see it in 2011, you see it in 2017, you see it in 2021, and then, you see it in 2022 with this trend down and then kind of an accumulation zone, and then bull market breaks out. So as I always say, I'm not a technical analyst. I don't, fully buy into technical analysis and think it's like the end all be all. But I do kind of look at it as like, lanes on the road, kind of guiding you in a general direction. So I like to look at these, especially the big picture ones, to take a step back and maybe look for, a zone to accumulate in. And, like I was showing you here, in my opinion, this is the zone. We're under 30K. We're here for an extended period of time. Who knows how much longer we'll be here? Obviously, we had a little moment before where we, peaked up above 30K for about a week and then came back down. So, when you zoom out and you look at this bigger picture, in my opinion, it makes a lot of sense to accumulate Bitcoin here if you still believe in the long-term thesis. But be prepared, go back to this this chart here. Be prepared to be holding on to that until 2025 if you want to look at, the big picture. And typically what I always tell people is I'm looking at 18 months to 5 years out. And anything that I put into the market right now, I am prepared to hold it for that long. Because you never know what's going to happen. So don't mortgage your house and put the money in Bitcoin and think that you're going to cash out, in a month and make a bunch of money. Look at the longer term is my general perspective. So next thing, Paul Tudor Jones was on CNBC. He was talking about, the global macro trends and what he thinks about, everything happening on a, global scale in terms of Israel and everything. But then he also talked about Bitcoin, and he was talking about how he believes that Bitcoin and gold are going to be 2 of the big things to hold, 2 important holds in the current market environment, especially as we kind of enter this like deep recession mode, which, some people are denying, but others are pretty adamant about saying it's obviously already here. So anyways, Paul Tudor Jones thinks it's a good time to hold Bitcoin. He said he really likes Bitcoin and it should take on a larger percentage of your portfolio over time. So I think most of us generally tend to agree with that as a, hedge for the, global markets. That's actually the entire reason Bitcoin was invented. So Miles Ducher on X, it's that stage of the cycle where alts are getting smashed versus Bitcoin. But what's next? Will the bleeding worsen or is a reversal near? So I've seen a couple people talking about the altcoin market, and we are at these, pretty bad lows. The whole altcoin market, so when you exclude Bitcoin, is worth only about $500 billion right now. Obviously, you look at other cycles, and that's still a pretty hefty number. But in terms of where we got to, almost $2 trillion in altcoin valuations, we are way down there. So we are seeing Bitcoin dominance creep up. I think for the first time in a while, Bitcoin dominance just went over like 51%. So, definitely interesting to keep your eye on the global trends. And that's kind of the theme of this video. The global take a step back picture of, where everything's at. And I think altcoins are kind of in this very low territory. So if you are a speculator on altcoins, it could be a good time to kind of flip in and out of those. But obviously, I always talk about, be careful with altcoins. That's like, if you are going to get very interested and spend 10 hours a day researching altcoins, then you might be able to make, a little name for yourself. But if you just want to, put your money into something and not worry about it too much and hope it goes up in the long term, stick to Bitcoin. That is my, not financial advice, but that is my advice to anyone entering the market. Jim Cramer said that Mr. Bitcoin is about to go down big. And I think you guys have all probably seen the anti-Cramer index and, don't buy into what he says. But, I saw some really funny replies to this. So Dan Crypto Trades, who's known for posting technical analysis, said, "The hero we don't deserve, but the hero we need." And you just see a bunch of other funny memes that are posted because, no one takes Jim Cramer seriously. And he tends to say things go down and then the next day they go up. So definitely love him to say that Bitcoin's going to go down, and I hope we see more of that. Another little funny tidbit. So this is a drawing from the SBF trial. This is obviously Caroline Ellison, and it actually does look pretty similar to how she looks, but kind of just a funny little piece there. So she did actually say in the I had an article, but I guess I accidentally closed it. She did say in the trial that SBF directed her to do everything that she did. It also just broke, the news just broke a few minutes ago that she said that she colluded with SBF to purposefully keep the price of Bitcoin under 20K, by selling customer funds. If that's true, I don't know. It sounds kind of counterintuitive if they were trying to save the business, but we're keeping crypto low because, if Bitcoin would have skyrocketed, FTX would probably still be around. Last piece of news here, JP Morgan debuts tokenized BlackRock shares as collateral with Barclays. JP Morgan's Ethereum-based Onyx blockchain and the bank's tokenized collateral network, or TCN, was used by BlackRock to tokenize shares in one of its money market funds. The tokens were then transferred to Barclays for collateral in an OTC derivatives trade. And obviously this is just mentioning that the tokenization of traditional financial assets is a big deal for banks. I think we all kind of think that's obvious. Banks make a ton of money doing what they do. But if they were to step into the digital asset space, it's possible that the volume of what they do could skyrocket. That being said, fees are going to be expected to be lower, competition is going to be higher. So will the market kind of even itself out? I guess that remains to be seen. But if they don't innovate in this direction, someone else is going to do it for them. JP Morgan's head of Onyx Digital Assets said, now with the launch of TCN, clients can benefit from additional utility of their money market fund investments by posting tokenized MMF shares as collateral, a faster, more cost-effective way of meeting margin requirements. So again, they're just trying to innovate in the space in terms of bringing those products that I think would get created anyways. Whether it's JP Morgan or someone else, these products are coming and they're coming fast. It's the tokenization of everything that we always talk about. But that's all I got for today. I will see you guys tomorrow for the October 12th episode.